Shri Gurubhyo Namaha, children. You're in Unit 2. Accounts of not-for-profit organization. So, in the previous problems, we learned how to calculate, how to do receipts and payments account. Right? So, we learned that receipts and payments, which is calculated on yearly basis, end of the year, end of the accounting year, you'll be preparing receipts and payments account. And in receipts and payments account, you record all the incomes and all, whatever payments you're making, whatever receipts you're making, you record. Okay, you don't categorize the current year, previous year, whatever you're receiving that particular year, you record. So, receipts and payments account, it is a real account. Now, in this class, you're going to learn how to prepare income and expenditure statement. So, income and expenditure account. Right. So, income and expenditure account is just, it's a summary of your income and expenditure received in that particular year. Okay. In income and expenditure of the not-for-profit organization. So, it is prepared at the end of every year, and it is just prepared to know the surplus or the deficit of that particular year. Right. So, it is a nominal account. Why it's a nominal account? All expenses and income. So, remember the golden rule, debit all the expenses and credit all the gains and income. Right. So, to know the accuracy of the account you prepare, it is just like the profit and loss account. Okay. And here you have to be very careful. You have to record only your revenue receipts and revenue payments. You cannot record your capital receipts and capital payments. So, you should be very careful when you select the items. So, in profit and loss account, you have all your indirect expenses recorded. Right? So, you should not record your capital receipts and capital payments, only your revenue receipts. What are revenue receipts? Like, subscriptions, interest on investments, sale of newspapers, of sports items, or collection of receipts. These are all revenue receipts. Okay. Likewise, you have revenue payments. What are revenue payments? Like you pay your salary, you pay your rent, then you pay for the audit fees, you pay for printing and stationery, you pay for postage. All these expenses relating to tournaments, sports, matches, because they're all it's a non-profit organization, right? So you should record only your revenue receipts and revenue expenditure. So be very careful with that, right? So it is just like a profit and loss account. Now, apart from the cash items, you should also record what? Income accrued, loss or gain on sale of fixed assets, depreciation, etc. are also recorded. Fine. So, why are you preparing this? Just to know whether you have sufficient income is sufficient enough to meet all your expenses. So, it is prepared from giving the receipts and payments account. From the receipts and payments account only, you are going to prepare your income and expenditure account. So, first step is receipts and payments. From receipts and payments account, you can prepare your income and expenditure account. So, before you learn how to prepare the balance sheet, you should know how to prepare the income and expenditure account. Right. So, once again, I'll tell you, the income and expenditure account is a summary of all the income and expenditure earned by the not-for-profit organization. It is just to find out the surplus or deficit of the particular year. It is just like the profit and loss account. Right, it is a nominal account, and the income is shown on the credit side, and the expenditure is shown on the debit side, right? And it is it just know whether you are earning sufficient income to meet all the expenditures of that particular year, how much of expenses you have incurred, how much income you have earned, whether your income is sufficient enough to meet all the expenditure. Just to know all this, you are preparing this income and expenditure account. So, any organization will prepare a profit and loss account to know whether they are making profit. Here, you are preparing income and expenditure to know whether you have surplus or deficit. So, non-profit organizations are not functioning to make profit. So, that's why it is not called as a profit and loss account. So, you understood the difference. Trading companies, they prepare a trading company, they prepare final accounts. They find and factories, they prepare trading account to know their gross profit, followed by that a net profit. If it's a trading firm, there's no manufacturing, isn't it? Only buying and selling. So you want to know how much profit you have earned. So here, non-profit organization, you cannot call it as a profit and loss account because it is not a profit and loss account. It is income and expenditure account to know whether you have a deficit or excess. whether you have sufficient funds, whether it is surplus enough to meet all the expenses. Right. Now let us go to the problem. Okay. Now, sixth problem, from the following receipts and payments of Tenkasi, Tiruvallur, Mandram, prepare income and expenditure account for the year ending 31st March 2019. Right. You have some receipts given here, you have opening balance, and then you have some payments. You have to identify, first of all, what are all the items that you should record in your income and expenditure account. So income and expenditure account is very important. In this, you should not record your capital receipts and your capital payments. It's very, very important. So as soon as you see the problem, you can mark and keep in pencil. Okay, so that you don't make mistakes. Right. Now see here in this problem, you have opening balance. Obviously, you're not going to take the opening balance. So you need not take, put a dot at least. So that you don't take it while entering. Okay, so here you have income received, interest received, definitely you will be recording. Subscription you will be recording. Legacy is not a capital revenue receipt, it is a capital receipt, so it will not come, put a dot. Then you have entrance fee, of course you will be taking it. Sale of furniture, only you will not take, sale of furniture you will not take. But the loss of profit incurred in sale you will take. It's a non-cash item, but you will be taking now, isn't it? So that is a loss. You will be taking 16,000, 17,000. It is sold for 16,000, book value is 17,000, the difference is 1,000 rupees. So definitely you have to record that, right? Now these are all your indirect expenses, expenditure, salary, yes, revenue, rent, yes, traveling. What are revenue expenditures? Revenue expenditures are expenditures will be recurring. Every month you will have to pay. You will have to pay your salary, you will have to pay your rent, you have to pay traveling expenses, printing. It go on, it keep on recurring, right? Now, investment made, of course, it will not come. Okay, that will be a capital expenditure. Sports equipment purchase, no, it will not come. That's all. Opening and closing balance. You don't have opening and closing balance in your income and expenditure statement. Okay, in receipts and payments, of course, you have your opening and closing balance to be taken. Right. Now, here you have opening balance, and this is your closing balance in hand and opening balance in hand. Now, let us go to the problem. Here you have the details. Okay, I hope it is visible. Okay. So you have the figure also, and you can copy from the problem. Right. Okay. Now, first of all, let us start doing the problem. In the books of Tenkasi. In the books of Tenkasi, Tiruvallur, what a huge name, isn't it? Tiruvallur, Mandram, income and expenditure. So you have 1 mark for the heading. Okay, if you don't write properly, they will reduce marks. So be careful when you write the heading. So income and expenditure account for the year ending. For the year ended 31st March 2019. Fine. Now expenditure and income. So expenditure you put debit and then you have credit. So this is the format. Fine. Now what all will come here? Only your revenue expenditure, only your revenue receipts. Right. So first of all, let us record all the expenditures. So we have put a tick on what all items will come, right? So you have to copy that here. So to rent, first to rent, how much to rent? 24,000. Fine. To travel expenses, to traveling expense. So income and expenditure, it is a nominal account. So in the golden rule, debit all expenses, credit all incomes and gains, right? Then to printing and stationery. Okay, how much is printing and stationery? 6,000. Just see if any other items will be coming, printing and stationery. And here you have, see here, this loss on sale. 2 loss on sale. 7,000 minus 6,000. 16,000 minus 17,000. Book value is 17. So you have a loss here. Loss on sale of furniture. That is 1,000 rupees. Right? Okay. Anything else? I don't think we have left out anything, right? To rent, to traveling expenses, printing. Just check your problems. We have left out anything. Yes, salary 20,000. We didn't record. See here, salary 20,000. That's why you should always check. So salary, rent, traveling, printing. So 1, 2, 3, 4. 4 plus 1, 5 items. Okay. So we have here 2 salary. So always after recording the income statement, you check once again your receipts and payments. Okay. Now here you have 2 opening balance. You're not going to record that. Then towards your income, interest received. Okay, you're going to record this. Isn't it? So by interest received. By interest received, 5,000. By subscription. Only the current year's income and expenditure is recorded. You don't take the previous years and the subsequent years in income and expenditure account, right? So you have to be very careful. By subscription, 55,000. Okay. Then followed by that legacy is it is a capital receipt. You cannot include it here. Then you have entrance fees. So by entrance fees. By entrance fee. 7,000. So check once again whether you have left anything. Interest paid you have recorded, subscription you have recorded, entrance fee you have recorded. That's all. So 1, 2, 3 items you have. Okay. Now, now that we have checked, cross-checked, let us close the account. Right. Nothing else is left. Right. So let us close it. 67,000. This side is more, obviously. Right, your credit side. And then see your debit side. 30, 32, 33. Isn't it? You have 30, 32, 33. 33 plus 20. 53. 67. So the difference is 14,000. So bring the same balance down. Okay, so when you are having a debit balance, it is a surplus. Okay, to surplus. So you have enough money to meet all the expenses, isn't it? To surplus. So excess of income. Excess of income over expenditure. Right? I hope you understood this, children. Be careful. You have to be familiar with all your revenue expenditures, revenue receipts. What are capital expenditures? What are capital receipts? Okay, as you do the problem, you will become familiar. You don't have to get tensed about that. Okay, thank you, children.